Welcome to this week's ASX edition of Trade the Trend, a weekly video discussing where the stock market is going. This video is going to focus on the ASX 200. I've also got an update on gold, so make sure you stick around for that. I'll discuss the S&P 500 in a separate video and leave a link for that in the description section below. As always, it's general commentary and doesn't take your personal situation into account. With all of that said, let's get into our first chart. So here is the ASX 200 on the screen. And as I film this on Friday afternoon, the selling has really intensified. It's intensified throughout the day. And it really caps off what's been a pretty ugly 2 weeks. So 2 weeks in a row. Last week we had a 5% trading range, and this week we've got a trading range of a bit over 4%. So there's some pretty big moves. It's not often that you see back-to-back trading ranges of close to 10% in total. It's pretty volatile stuff. And as I said last week, the volatility just highlights the need for caution in this current environment. And I think while the ASX 200 remains below these moving averages, so we've got the 50 and the 100-day moving average on the screen, whilst the ASX 200 remains below those moving averages, it remains in a vulnerable position. So I'm going to jump across to the 4-hourly charts to get a little bit more detail on the price action we've had over the last week. And we had early in the week, we had prices attempted to rebound off this support. So that was encouraging, and it gave the possibility that maybe the market would be able to try and attempt another rally. But that just didn't last long. As soon as that US rate hike came out, the market started to pull back. And the selling has been gathering momentum over Thursday and Friday, and then clearly taking it below this 6,700 support zone. I said last week that we needed to prepare for downside surprises, and that, I've got to say, unfortunately, that remains the case now that this support has given way. And for me, that means no leverage. And I've also got a high cash position. I think that's the play at the moment. I've also sold some of my ETF position, which I'd built up in through this rally in the market. And it's a case of, like, when the market is rising, if it did extend into something larger, I didn't want to be left behind, so I wanted a foothold in the market. But now the market is rolling over, it's breaking support. I'm not going to argue with the market, and I'm going to retreat, protect capital, and wait for the next opportunity to move back and establish a position where the risk reward appears favourable. And so let's jump back to the daily chart. And so with this decisive break below support, I think it really does re-engage the sell cycle that's been in place for really since back here in January. And I think it's now likely that the S&P 200, I think it's likely we're going to now retest and then break that June low. I think that's what we now need to prepare for. This pullback from the recent high, it's pulled back by so much. It's retraced so much of that rally from the June low that it now looks likely that it will continue to extend that a little bit further, retest, and probably break the low. And also with the small ordinaries, if we just jump over and have a look at that, it's been a particularly rough day. Small orders is down something over 3%, and it had been holding up relatively well. Even just last week, I was saying, look, it was encouraging in that it was holding on to much of this gain, but just in the last few days, it's really just given way. And it's retraced a lot of that gain from the June low. I think that does a lot of technical damage to the way the small ordinaries look. A lot of technical damage has been done through here, and I think even in the best case scenarios, I think it's going to take time to rebuild a positive price structure, which the market can then start to round up and test higher again. But that, I think that's a little way off now. This is going to take time for this to play out and see what's in store with this this current next leg lower in the in this sell cycle. I think the play here is to stay defensive. I'm still holding my relatively strong stocks in my portfolio, but then I'm also selling others as soon as they hit their exit stops. And I certainly wouldn't be buying the dip. So many people talk about buying the dip, and they have been talking about buying the dip since the high earlier in the year. But I think buy the dip is one of those things. Buy the dip works well when stocks are in a primary uptrend. When they're in a primary downtrend and they're below their moving averages, that's when you stand aside. You don't buy the dip. I think people who have been buying this dip the whole way down, they're probably now wondering, well, what do I do now? Do I keep buying the dip? And you can, particularly with individual stocks, it can be a world of pain working out what to do with these stocks which are continuing to decline. Now, if you're getting value from this, please hit that like button. And also, please leave me a short comment. Just, hey, thanks to the video. It just tells YouTube people are engaging, people are watching, and it helps so much because then YouTube pushes out to more people and gives them the opportunity to watch. And please hit that subscribe button if you haven't already. Another great thing for YouTube to see that, because it takes ages to put these videos together each week. So it really helps if you can please do that. And also come and visit me over at my motiontrader.com.au website. Love to see you come over and see the sort of stuff that I'm doing there and what else I have to offer. A lot of free stuff, a lot of stuff that could help you. And now I want to finish up with a quick look at gold, because it's been an interesting week in gold as well. So just finding our gold chart. So what we have with gold is it's pretty much spent all week sitting right on this support zone at 1,680. So this is a key support, and it goes all the way back 2.5 years to around February 2020. So it's a significant support zone. And I think the longer gold sits here, I think the more vulnerable it becomes. It becomes more vulnerable to if it can't bounce. Like all these previous times it's come down, it's bounced straight away. Now it's sitting. It looks like it's sitting, waiting to be hit. And that's the risk, I'm afraid to say, with gold while it sits here. The price action just doesn't support a bullish stance at this moment. I want to be bullish on gold. I've been bullish on gold for a long time, but you can't argue with the price action. The price action doesn't support that bullish stance at this present time. And if we look at the gold stocks, so let's just have a quick look at one gold stock. We'll look at Evolution Mining. So I'm going to put this on a weekly chart to give us a bigger perspective of what's been going on. Now this is quite typical of the gold sector generally, what's going on in Evolution. And I've got to say there is absolutely nothing bullish about this chart. It does appear oversold. It's had a strong move down over the last few months. It is oversold, and it could well rebound. You could get a rebound, and the rebound from $2 to $3, for instance, would be it'd be quite a good rebound. But they're very hard rebounds to try and catch, and there's a lot of risk in trying to catch them. Long way below those moving averages. But look, playing for that snapback rally, I think that's risky. I think the overall technical structure is awful. There's a whole lot of technical damage done, and this is typical across the sector. Just look at what happened after this sell-off during 2012, 2013. This was something like a 70% decline, big decline. If we move the chart back there, looks a bit uglier when you look at it. When you can zoom in on the price action a little bit more, really big decline, but look at this. Then it took a good couple of years, and remember this is a weekly chart. It took a couple of years of back and forth. Did have a snapback rally, gave it back, chopped around before things got going again. So from this point in time, for a bullish scenario, I think it's still going to take time. It'll take time for a stock like this and stocks like golds in general to base, turn higher, and rally again. So look, let's leave it there for this week. Hopefully that's been helpful. Hopefully give you some perspective and some ideas around where we are at the ASX 200 and with gold and gold stocks generally. I'll be back next week. Look forward to talking to you then and going through the charts with you. Until then, bye for now.